Hey everybody, and welcome back to another episode of the Soldera Markets podcast. Today we're joined by Faraday Trading. So we've got Koen, Andriessen, and Chris Myers from Faraday. Want to hand over to you guys to do a little introduction about yourselves and tell us about Faraday. Just for the audience, we can say that Faraday are an environmental commodities trader, and obviously this is a podcast that focuses on the guarantee of origin and renewable energy certificate space. There's going to be a lot to talk about, specifically price action. I think that's what this episode is going to be focusing on. But yeah, over to you guys just to do a little bit of intro about yourselves.
So my name is Koen Andriessen. I'm together with Hidde and Christopher, one of the co-founders rather of Faraday Trading. Our backgrounds are actually in financial markets, and we're kind of the new kid on the block in terms of the geo market. We started January last year, and now we're quite active in the geo space, and I'd say quite getting to be a household name.
Anything to add to that, Chris?
Yeah, well, basically, I think it's fairly important to highlight that we have an extensive background in market making. So all three of us, our careers have started in the financial industry, mainly focusing on market making financial instruments and derivatives. So an extensive knowledge when it comes down to risk management, to liquidity provision, and because equity markets and financial markets are technologically a little bit more advanced, we obviously bring a huge technology knowledge that comes with it.
So you guys are one of the most active guys I've seen on the market, and always very much enjoyed working with you. And things move fast, get done fast, and it's like very to the point. So what initially brought you to this market? Why did you decide to open shop geos? That I think it's a fascinating story.
So, well, effectively, what we saw is the market that we're coming from, the financial market, is, let's say, a bit more developed in that sense compared to the geo market, where you're working already quite efficiently. And what we saw specifically in the geo market, besides that it's, everything renewable is just very interesting because there are a lot of changes happening, means that there are definitely interesting parts that you can focus on. But what we saw as our role within the geo market is just a party that you go to for a good price, and that's it pretty much, right? So everything at the back end is efficient. We try to automate, similar to you guys, as much as possible. So I don't want to do any stupid work in terms of filling in everything. So that's really what we try to do. And I think a key difference between us and, well, a key, let's say, strategic point for us is that we're actually rather passive in obtaining flow. So we're more of the approach that we wait for the flow to come to us. So if you want to have a good price or a price in something, I can show to you. If you don't have anything to sell, I'm not going to try to call you and convince you to sell something. That, of course, also means that a big part of the market you don't interact with because some parties just operate in a different way. But what we do see is that a lot of producers, large corporates, they appreciate and value our approach.
If you parallelize it with where we were before, is that it's always like how a market works. You have, your top 70% of volume has been traded by your top 10% of kind of people. Nevertheless, it means that the vast scope of people that are using these geos is growing at a rapid pace, and the size of that market is just gonna continue growing for the while, at least for the foreseeable future. Well, coming back to your question, what we see, we want to kind of give these people the possibility to find a liquid market. And that's not always the case when the technology isn't there or the marketplace isn't there, or it's a bit more obscure, let's say. And I think that's a really good point to make, that we want to be this liquidity provider in that space that's out there that you can just reach. You get a market, fair market, a firm market, and an efficient and a quick market without having to make any more noise about it than necessary.
How much volumes do you guys move in a year? Because you sort of, I think we actually started roughly around the same time, even if I'm not mistaken, right? You guys had like massive amounts of, like, you've always been very efficient from what we've seen on our side, essentially.
It's always nice to hear.
That's what we aim for. So I can share that last year which was our first year, we traded a bit north of 10 terawatt hours. And of course, you do have to keep in mind that we started off in January. We're new to the market. It's a bilateral market. So a big chunk of that year is effectively building relationships, doing the KYCs, getting onboardings done. So I can say that, this year we've definitely surpassed what we traded last year already, and I would expect it to be a multiple of last year's trades.
Probably
Nice.
important to highlight is also that we don't do any double counting. So it's not because we trade with A and B that we say we did 10 terawatt hours. This is always directly traded with us. We are the counterparty. So people, when they trade, it's one trade. It's not two trades. Yeah,
Makes sense. Yeah, I assume a
easily
lot of
inflate
people.
your numbers with a factor 2 if you obviously always count all trades on all sides. But so that's clean, direct, traded with us. Nothing added.
All right. So, and do you guys have also taken a look at the rec market as well, or it's mainly been focused on geo so far?
Yeah, mainly focus on the geo.
Really focused on geo so far. And it's also the case that I would say that we're specifically very sharp in the more generic geo, so to say. So of course, if you want to buy, for example, AIB grid connected, then we can give you a sharp price. I'm pretty confident. Whereas due to the way that we are set up, if you come for a very specific niche volume, it might be the case that we're not the best price in there. And that's also fine. It's not necessarily our aim to be the best everywhere because, coming from our approach, we really focus being the best in the more generic things in terms of selling, and buying specific, of course, is not really a problem.
It's logical also because it's also the way that product has been set up. You unfortunately have niche pockets where people with very strong convictions want to specifically do certain things. And obviously that comes with a price. And I think most people are aware of that. So that's fine. But our focus lays on the more liquid side of the spectrum, which then also allows us to take away that, the wide spreads that you might see in other niche pockets.
I want to leap on the you use the word conviction. So you come to the market, you started trading firm in January 2024, so last year. So you haven't been around for too long. But really, when it comes to the geo market and these high liquidity areas like the AIB hub connected, more generic certificates, what drew you to the market besides the sort of fragmentation and wanting to bring transparency and volumes? Because lots of people could look at the market in its current state, and opinions vary, right, on where it's going. So I'm curious from the standpoint of choosing to start a firm in geos specifically. That's something that interests me quite a lot because I imagine you have an opinion either way on the market, right?
Well, having an opinion on the market, yeah, sure, we have a certain opinion, and there are things that you can track, especially in terms of production on the market currently. What drew us to the market as well is just we're coming from a trading background, and by nature, traders are people that are quite entrepreneurial. Be it that you trade for a firm or be it that you trade for yourself. So we really wanted to give a go. It's also the first company that I founded, or that we founded. I think all three of us is the first one. So it's also just a really nice challenge to see, and especially in a market that, as I said, I think the renewables market is really booming, specifically the last 10 years or so. And it's just a market that I'd like to be in, to see what is happening there, to see how we can actually add value to the market by being a market maker slash liquidity provider, right? Which is not something I would say that's standard. Like a lot of people trade back to back. So I think, yeah, those things all add up to the fact that there is a space for us in this market, right, where we can start and trade from. And that's also what we've seen. And also the people that we trade with, what we typically hear is that we are good at what we do, and we kind of make true on our promises in terms of you come for a price, I give you a price, and the rest is kind of hassle free, right? We deliver on time, we pay in time. The contracting is done fairly quickly. Typically, we send you the contract the same day, if not, in the next few days. So it's all the KYC process is all, somewhat automated as far as you can do that. So it's really there that we saw space for a party like us in this market that made us enter it. What's interesting though, and what's something that I'd like to talk to you about, is that one thing that kind of, well, surprise is not the right word because it is a European market, of course, but you have all these, you know, small, you have all these unique registries for every single country, whereas that's not the case for all of the environmental products. But I believe you guys have somewhat of a, I'm not sure solution is the right word, but it's a way to make it easier, I believe, correct?
Yeah, exactly. Like, tell about our side. We got into this market because we noticed 30% of producers are not selling their geos, their residual mix, right? And when we started looking into it, we understood it's just there's too small. And like you just mentioned, like the local fragmentation, the bureaucracy of the registries is quite insane. So we thought we'll just build a solution to automate all of that. Like, why not? And actually, the story goes that the first geo deal we ever did was that I went to my friend's place who has a solar panel on its roof. I had a wine bottle with me and I was like, why aren't you selling these things? And he was like, I didn't even know about it. So then we sat down with Al with him and drank the wine and filled out all the forms for him and let him sign on the spot. And that was our first actually how we like got into that market. I mean, we've been in carbon markets for 10 years before, but we were like very interested how this one works, and what we found, it's a lot of things we liked, and made the entire pivot to from carbon market to renewable energy from that point. All these government registries we discovered, they're pretty much the same. They're just a lot of overhead, a lot of compliance. They don't have APIs. They're very annoying to work with. And we were like, but we're in the age of AI. We can automate the compliance with AI. We can integrate with registries, even if they don't provide APIs, thanks to our technologies. And we've been building like this virtual layer on top of the local registries. So everybody will be able to use these different government registries everywhere without them having to need their own accounts. So we've had like select partners who've been using this access like manually essentially, but very soon we want to offer it out there, like somewhere around the end of summer, we're going to approach you guys and say, hey, here's all our registries, here's where we're integrated. Do you want to use these different countries? And our goal is to eventually like build sort of like a, I don't know if you heard the term neo bank, right? So like all these Revolut, Wise, and so on, they offer you their bank account and you can send money and you do whatever you want in their app. But underneath, there's a very traditional bank they're basically built on top of. So we're kind of doing the same for government registries, and our goal is to make sure that you can trade, cancel, use it in any country you want, and you don't need to go through all this local compliance pain. You just can use our platform, send geos to our virtual accounts, and cancel them, trade them, whatever you want. Avoid the import-export fees, keep the geos in the local country, and just pay them when you finally know exactly how much you're gonna have to send to your buyer.
Now I'm keen to learn more about it when the product is finished. And just to come back on the way that you guys started, so how much new volume have you brought to the market in terms of geos?
It's hard to say exactly because we haven't like kept that specific KPI in mind, and we do have like existing customers and big utilities who have approached us and joined us as well. But from a gut feeling, it's about 1/3 is completely new volumes that have never traded geos before. We currently manage like 1.5 terawatt hours, so a third of that, around 500 gigawatt hours, is definitely new volumes, and that's growing very fast. The interesting thing about that, though, is what we discovered is that a lot of countries are breaking AIB rules. AIB directive, the RED 2 directive, I think, specifically says
Red 3 actually, yeah.
RED 3, okay. Specifically says that producers smaller than 50 kilowatts should be able to have easier registration flow for their devices. Many countries make it completely impossible for them to register. Sweden, in fact, recently just started doing change to even ban them. Like, they don't want to deal with them because they say it's too much work. So basically, what's sort of stunting our impact a bit is that governments are not following EU directives or the registries rather. So like in many countries, like we can only focus on 100 kilowatts or above, or 1 megawatt or above. In Slovenia, you actually have to pay 15 grand if you want to like export your geos. Like it's crazy, right? So it's in Lithuania they have laws, a prosumer law, which I won't get into too much details, but basically it excludes almost everybody that's under like 500 kilowatts. In Finland, you have to pay basically 500 euros base fee a year, which obviously excludes anybody that's like under 1 megawatt already.
In addition, you have to get like an audit is an extra couple €100.
Well,
And this is also
that was included in that. I sent
yeah.
Because I think it's like 250 plus audit or something.
Yeah, exactly. So per device, you rack up fees. At the same time, we see a really similar thing in Latvia. Hopefully, we've managed to cause some changes there. But there for a while, it's been one auditor can only do audits. And then everybody has to get audited every 5 years from this one auditor who basically gets to set whatever, price they want for it. So it's been kind of confusing all around. Of you look at this patchwork and you look at the renewable energy directive and you think everything's going to be relatively standardized, but once you start getting into the details, things start making less and less sense. I mean, there are countries where there's essentially like a guy with an Excel sheet managing guarantees of origin for the country, right? Yes.
Yeah.
Yeah, and the communication around it, the marketing around it is also done very poorly, I would say. I mean, we all know in most countries people are incentivized to put solar panels on their roofs, to have home batteries, etc., etc. But communication around this, unbundling of the energy and then the certificate itself seems to have very, very, very low penetration within households, I would say, and smaller companies. And obviously, with levels that we see now, it's maybe not the most important thing, but it would be so much easier if it would be very clear cut and transparent, and obviously a bit more unified, because this is still Europe, and it seems that in many ways we are still not one.
It's worth bringing the conversation back to how the market is structured altogether, right? And you have AIB, which is a non-profit based in Belgium or Netherlands. I'm not quite sure which, but essentially, right, the EU doesn't prescribe any idea of how these things should work other than a high level sort of technical mandate, and then the AIB's role is to find a way to integrate that from a technical perspective, and that's how the EECS framework came around. But like there isn't really a responsibility, it feels like, for anybody to take the lead on marketing or take the lead on making this thing feel like a commercially well understood, and I think that's one of the main problems. And you can link that back to the accessibility of the market as well, because the AIB don't have any enforcement mechanism besides barring people from being in the AIB themselves. So you have like the EECS rules saying that, well, members need to make it cost effective for market participants, but then they also say, well, they should be allowed to charge whatever they want to be commercially viable. So it's like it's a constant balancing act. And I guess, that's just the case with anything that's top-down, government-driven, because they're never going to have user experience at the forefront of the equation.
Speaking of marketing, like if you go outside of the geo bubble, anybody you speak about and you explain what are geos, they immediately think they're carbon credits. And that's actually quite a big issue, because carbon credits reputation, as we know, regardless of what carbon people say, is horrible. The public doesn't actually, I don't know anybody, honestly, from outside of carbon world that supports it. And it's like people are very, very skeptical of its impact. And there's a lot of bad stuff about it. So the first thing you always need to explain that, no, these are not carbon credits, these are actually regulated. But I distinctly remember one presentation I did on stage here in Estonia. And I was basically talking about Soldera, and in front of me was the Estonian Environmental Ministry Committee, essentially. The guys that should know what are geos, they made the laws about geos, so they were at least included there. And then at the end of the presentation, I got 3 questions. And all three were like, how do you ensure that these are trustworthy? And I'm like, well, do you trust your local DSO or not? I basically explained to her 3 times that these are not carbon credits. These are for tracking electricity. And it's completely different. Like there's nothing in common there. And it's your own grid provider that gives out these certificates and consumes them. It's very logical, actually, very simple. 1 megawatt hour goes in, that's 1 certificate. 1 megawatt hour goes out, that's using 1 certificate. Like we're not the party that ensures the quality. That's the TSO, right?
I think that's actually one thing that's very interesting, an interesting difference, say, between financial markets where you would just trade stocks versus the GEO market, where you can actually look at the GEO because it's a tracking mechanism, nothing else pretty much than that, and you can actually zoom in on the specific power plant that produced it. And I think what you see being lobbied for as well is to go to a more granular approach. Probably also will help, I think, in terms of the geo adoption and the story and the marketing part that you can say about the geos. Of course, the more granular you get, the more it makes intuitive sense. We don't have to have the discussion how granular is good enough, right? I don't think we're gonna go to 15-minute geos. That's pretty much as granular as the power market gets currently. But steps towards a more granular approach will definitely help the marketing of the product, I'd say.
I think we just all agree that the up to 2-hour window is probably not the correct granularity we have right now. Well, in Estonia, we essentially have the system of where you have this 12-month trading period, and after that 12-month trading period, you also have a 6-month hold period where you can still use it. And that makes it so you can have a very long timeline where you actually, can use it for canceling against the consumption of electricity, and that has never made intuitive sense to us. So why does it work that way? While you do see governments moving at least towards this logic of you produced it in this year, you consume it in this year, I think that makes a lot of intuitive sense at the bare minimum.
And even less than a year.
But RECs are half and half, right? So the international RECs. So you can say that the international RECs are somewhat ahead of the curve on that one, even if that makes sense. I guess one of the big, now that we're on the granularity topic, I mean, the market participants in general are very much against the granular geos because, well, mostly because they don't want to change their business, right? And it's very simple right now.
And then more, just again adds another layer of complexity to a market where a lot of people who are using these products are where it's not their main job. So
Yeah.
it's an admin layer on top of the total package. And if you're also gonna have to incentivize to do even more around all this, although it would be good for the environment, it's a big ask, I think, to be very frank. But that we need to automate it and make it simpler. And this is the other side of it, right? Why is this still so difficult? And how can it not just be, again, as we said, one registry, everything goes into one, simplify things. For years in the financial industry, you've had financial products that were misused by the players on the street, mainly because of the granularity, because there was this, difficulty around it. And the second you take those difficulties away, well, you suddenly see loads more volume, a lot more players, and it becomes a lot more liquid and a lot tighter.
So that is the big argument often brought up against granularity. Like, how do you ensure liquidity? And you guys being market page makers would be fascinating to hear your thoughts on it.
Well, it's data.
Speaking from other markets, you basically have some automated trading tools essentially to manage, like, let's say 15-minute window or 1 hour window.
So the power market exists. The geos are issued based on the power that is produced. So effectively, all the data is there, right? So if you go towards a more granular approach, then it would just mean that the registries have to add more data. And from us as market participants, it means that we have to digest the data. Now, yeah, digesting data, I would say, being automated, doing things efficient is kind of up our alley in that sense.
But do you guys see that there will be liquidity issues with more granular markets, or it actually will just force evolving of the existing players essentially?
Well, I think I mean, the more granular approach, what would happen is that it would actually help more renewable energy at the point that there is not enough of it, right? So you would get very large price differences, like in the power market, right? Of course, the GO will never be worth less than zero. But effectively, when the sun shines in the Netherlands, the power price dives very quickly below zero because there's plenty of it. Now, yeah, how nice is it then that those GOs will be virtually worthless, meaning that you actually stimulate the use of GOs and additional renewable energy at times when it's actually not there. And it can be, obviously, will be solar here, but maybe putting a battery between then suddenly becomes a little bit more viable. Having said that, though, currently, I mean, as is, the GOs are just a small part of the power price that companies pay. Like if I pay 70 euros per megawatt hour and my GO is worth 75 cents, let's say euro, what does it really add in terms of making a decision whether or not to invest in a new wind plant? Yeah, probably doesn't have a very big impact.
The Landesviken from Iceland did put up a surprising statistic, though, that 7% of their revenues came from geos. That was very surprising for me. They probably made some good trades there, I assume.
I would assume so. I wasn't familiar with that number, but it sounds pretty good. Or they don't make enough of power. But I haven't seen that number, so I can't really comment too much about it.
Yeah, the granular geos are definitely. I'm interested. Do you have like any gut feeling yourself when we'll start getting these things actually happening?
That's the European Union, right? That those things are decided from the European Commission. So no. It's the short answer. I'm not sure how long it will take for any changes to take place.
No, and on the other side, obviously, it sounds so logical. You have all the data; it is there. It shouldn't be that difficult. Blah 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 blah. But in the end, as Koen mentioned, rightly so, is that it will have implementations on pricings around these moments when there is plenty and moments when there's not enough, making it a lot more variable, potentially attracting a lot more people who might speculate. That's one. Second part of it is that I think it's part of the balancing exercise that this whole market is doing between the old style non-renewable versus today the energy mix with a lot of renewable, and planting batteries everywhere. And it's also, it takes time. It's not something you can just, again, it's not a financial product that you just launch and say, okay, here we go, here it is, and let's make it.
Yeah.
No, it's physical construction. I think Europe in that point of view is always slow, don't get me wrong. But in this case, it's maybe not always so wrong to do it step by step instead of just saying, as of tomorrow, we could do it. What will be the implementation be? And maybe there will be a lot more focus on the geo, I think, at that point. It could be really swinging about.
Yeah, well, you always have to, like, if you invent the phone, you can't like start from iPhone. You have to start from Nokia, right? So, and even earlier. So it's things have to come step by step. And I think geos are in general, like they're still a young instrument. Like they only got regulated like a bit more than 5 years ago. So with the AIB,
same goes for electric cars. It's infrastructure. Things have to. You can claim that everybody needs to drive electric, fine, but who's going to produce all the electricity? Where are the cars going to charge? What's the technology behind it? How long will they last? I mean, there's loads of questions that come into play. I think the ultimate goal, I think we agree there, is that more granular prices and shorter windows will be beneficial and helpful for people who really want to be very specific and balance it all out. I mean, there's a commitment that a lot of companies do, right? A lot of commitment around, we want to be green, but we don't want to be legally green. We just want to be real green. We want to have either windmills on site. We want to have the storage of our green, PVs on site with batteries. We're replenishing our total, fleet, and that needs to be able to load up, on all our different venues. So it's the wheels are in motion, but might not be for tomorrow.
Plus, it will bring more, volatility to the market as well, which is good for getting more actors in.
It's not bad. It's real, right? Volatility is real, and it's just like players like Faraday, who are in market makers, who will, try to balance out these kind of irregularities.
Honestly, I think people that think volatility is bad don't understand how markets work. So it's
And brings us
like,
back to us, right? I mean, if the
yeah.
question that Ollie asked in the beginning is what triggers you in such a market? Well, what does trigger us is that you've got days where prices go up 35, 40%, back down 25, 30%, and then end up pretty much flat somewhere. And very often what we feel, it comes from lack of people who are willing to make markets. And that kind of pushes things, and it pushes it quite extensively, right? So if you're managing a portfolio of GOs as an energy producer, and you suddenly up 35% on the day, and then you go for lunch and you come back and you realize you're down 5. I mean, don't get me wrong, it doesn't move that quickly in their minds either, but it's cool to have a player who's there to give you markets, and actually tradable markets, prices that are firm and that you can, you know, lean on in case you say, actually, I wanna capitalize on that move, and 1 or 2
Yeah.
days later maybe move back in. So it kind of as an investment tool, and also as a hedging tool towards larger institutions, we seem to be quite favorable when it comes down to that. Offset some of that risk you're holding, pay back on some of that risk if you're willing, instead of the discussions that we sometimes have with people is, oh, we have a view, it's gonna go somewhere there, and if it goes there, then I'll do that. Well, like, okay, but that means you're not moving for 6 to 8 months probably. Oh yeah, okay. How about all the other moves that are happening at the time? Oh, well, we have a strategy, it's called then. Well, we're very keen to interact with those strategies and offset some of that risk and take on some of that risk when you feel like it. And instead of having to, feel like you're pushing your product to another guy who's then going to hold on for it forever, that's just not us.
Speaking of which, what's your view on the market?
That's a good point, right? We have this very, very sweet spot. That means that we don't really have to worry too much where it's going. If it dries up, that's a different story. For us, it's the interaction, it's the trading, the constant trading we do all day long. That's what makes our risk model, let's put it that way, efficient. And the more we trade, the more it becomes efficient. It would be, I would say, quite dangerous to say if you take one huge view and act upon that, only that, because I think it's the way to get burned. We feel like the more we can attract people to trade with us, the more that we have a sensation or a feeling of where the market is going at that time, and that will influence the way we would potentially trade. So to generically say, for example, in 6 months' time, we'll be at €2 again. Some of those discussions we've had with some people at some of the meetings that we've had, it's fine. There needs to be a market. Everybody needs to take on a view. But I think for Faraday, it's a bit, precautious to say, well, we're only going to trade one side or one way or one direction.
Well, you're a market maker, right? Your main thing is volumes, basically. Somebody told me that the geos on average are traded around 7 times before they get to cancellation. Do you have like any data points on that front? Or
Sounds like new data to me.
Well, no, you can see from the AIB data that bring out every so often how often the geo is transferred. I don't know the exact number by heart, but can very well be the case. So what you do see is that there are more people active in the market and there's more trading happening, making the market, you would assume, more efficient as well.
Yeah, absolutely.
So, and what is your view on the market?
So one of the things that we historically have been seeing is last year there was quite a significant increase in supply. Well, we've been seeing this last couple of years, but it's been building up. So there's a relatively high amount of just supply looking for a home. Essentially, what we do see this year, the counter trend to this is just the fact that so far renewable energy production actually in Europe is down. So we're seeing that affect the incoming supply. The other thing that we're seeing is that demand is still growing. So overall, we're quite optimistic on the supply and demand dynamics right now.
Do you have any numbers?
Well, I've seen a couple of estimates trying to estimate the whole year of how this is going to play out. The numbers that we are currently seeing is somewhere between 60 and 80 terawatt hours of less production than last year. And in addition to that, an estimated growth of at least 50 terawatt hours of demand. So those two things together, if you consider that in the bigger picture of there's around 700 something terawatt hours of float essentially in the market, it's a pretty significant chunk of that.
I'll be very curious, to compare actually the production numbers that you have, because looking at ENTO ourselves, we don't really estimate such a big drop in volume this year. But where I do agree with you is that there is quite a large amount of geo overhang at the moment that essentially will supply the market for some time to come, I'd say, because if you're talking about 400 to 500 terawatt hours that are currently well left or looking for a home, as you said, Al, there's pretty much half a year's production roughly, and a bit more than that, more than half a year's demand, right? It's interesting to see how that develops and at what point in time, of course, if a trend continues that there's more demand, then maybe in X years from now, you will see a bit more of a balanced market. That's effectively demand chips away a little bit of that supply. Then again, looking at the targets of the European Union in terms of the amount of renewable energy, the projects that are still ongoing, and just the sheer amount of extra supply that will become available every year, especially solar, I believe, has a really big increase. So it's interesting to see how it develops in the next couple of years.
And solar especially, I find like really interesting as a case, since even though we do see more production coming online, the solar market feels like it's in this awkward place where the sun is shining and everything looks great, then prices have a tendency of being close to zero, if not negative. So the feeling is that we do also see some curtailment and some cannibalization come with this. So essentially, it really depends on the area, but there are areas in Europe where you can add more solar panels. It does not necessarily translate into like more energy production necessarily anymore.
That's fair. Yeah.
Did I hear correctly, Al? You said there's 700 terawatt hours over.
I think it's like between 5 and 700 roughly. Yeah.
It fluctuates. And there's like a methodological difference as well. So one way you can look at it is people can also be holding supply. Essentially, even though we produce every month, we don't necessarily cancel for the consumption every month. So what you do end up seeing in the market is also there are these periods where cancellations go up, and then we see the floating supply go down significantly. While at the same time, you can't assume that every single megawatt hour on the market that isn't cancelled is necessarily, actually trying to find a new home. But these are like rough numbers.
You mentioned that the production is reduced this year by 100?
Yeah, somewhere between 60 to 80.
60 to 80. And the historical float, I remember you had that as well, so we could actually compare how it's been moving, if I'm not mistaken.
Yeah, I have a more conceptual question, and forgive me for making a crude analogies to financial markets, given you guys are both, you come from financial backgrounds, but it feels to me like there's two kind of places where data to make, insights into a market come from, and that's kind of the underlying asset. So in the case of equities, you're looking at the performance of the company, and in the case of like a commodity, like an environmental commodity, you're looking at production data and the discrepancy between issuance and production and stuff like that. But then you've also got data on sort of market participation and participants. And there was a particularly spicy day in the office a couple of days ago when prices were surging, and there was kind of, it almost feels like, in a sense, when you're in that conversation, a little bit like a conspiracy, like who's doing what. I was wondering, as a trader, how much, or a market maker in your case, how much of the job is having your ear to the ground and trying to work out what other people are doing, trying to find data on that, as opposed to finding data on the underlying market itself. And does that question relate to timeframes in terms of short-term decisions and long-term decisions?
That's a good question. I mean, being a trader and trading in general, regardless of the product or the market, is about developing a certain case based on several factors, right? And there are always unknowns. They're known unknowns, so to say, and they're unknown unknowns. So there will be things that you won't ever be able to explain because you cannot see the whole market, right? Because it's so complex. And I remember when I was a trader, people would ask me, like, what's the hardest thing about your job? And the hardest thing I said is always that at the end of the day, you never do your job right? Because you never, it's only with very rare occasion that you can sell the high or buy the low. So there's always something that you can do better. And that effectively that's in pretty much every market that you be active on. If there's a market that's the case, I'd be very eager to know and eager to join that market. But it's effectively, yeah, it's you're working with a lot of unknowns, so it's only, it can take some time to actually have your analysis validated. And sometimes you're correct and you can still lose money, right? And sometimes you're wrong and you make money. So it's that is the life of a trader, so to say.
When it comes down to information, it's always important to understand, first of all, who are the actors within the environment that you're playing, and what will their reaction be to this kind of information. And I think your comparison with the whole pizza thing is amazing, because let's say 8-9 years ago, a lot of people would not have cared that much, even if that information came out. But if you look at financial markets, thanks to the Robinhoods of this world, we're looking at retail involvement up north of 30% of volume. So if they happen to be, and if you want to, and this is a bit of a not nice thing to do, but if you want to classify smart money, quick money,
Dumb money.
and dumb money, if that dumb money, I'm not saying that all retail are obviously dumb, but unfortunately in these markets, you do have a big boat that can move ship quite quickly and do totally irrational things. And I think one of the nice things we've seen in financial markets in the last 3 years is the real impact, is that when people are selling, they're selling off in chunks. They don't hold. You have these real quick reversions because they come back in. So they behave in a different way, meaning that having your ear to the ground, using information, it's having for you to understand what is that information going to do with the market that I am acting in. And if you've understood that, then information becomes valuable. But
I link that back to the question in that, you have market infrastructure data, and linking that to retail participation in financial markets, for example, you see people starting to clock onto the fact that there's, incredibly high short interest in a particular stock, for example, or that there's a large amount of trading volume that's happening off exchange and happening in a dark pool, and people start asking questions about the actual infrastructure of the market and using that to inform their trading decisions. Do you see any parallels in the geo market in terms of looking at how actors are behaving and looking at how the complexity of the market is starting to sort of form a topography, and then being like, okay, because I'm seeing this pattern here, that might inform how I act, as opposed to purely looking at stuff like, production data?
If you really want to compare with what's happening, what we see in the geo space for now is that there are probably just not enough people who trade enough volume. There's a lot of people who use these once a year, once every 6 months. The amount of people that's really active, I think that is one of the things that is kind of important to keep in the back of your head. That it would be great if more people, traded more often, and if the smaller chunks get spread out more, trade monthly, even weekly. I know it sounds like an admin nightmare, but
That's why you have us.
that is something that could really help, because there is a bottleneck there still.
Yeah.
And that's also why we think it's great that Faraday has joined this market, because it gives an out, it gives liquidity. Basically, it gives air to a market that could get really quickly congested.
Yeah, I agree. I mean, it's always been very nice. I think like Soldera and Faraday work very well together, right? Because you guys always provide liquidity, and we help these players aggregate together, so they even have the volumes to do monthly trades, essentially. Because if you're like a 1 megawatt hour producer, you simply don't have the volumes to participate even properly. But the podcast has been going on pretty long, so I think we need to start wrapping up. So I'll just ask one last question. What happened last week? We all know that the week of 16th to 20th of June, we had a lot of trading, a lot of activity, prices almost 2x. So any thoughts or indications there?
It's not an easy one to
Interesting.
answer.
Yeah. No, I think there are just a lot of buyers. That's the that's the short answer.
Yeah.
You know,
The short
let's,
squeeze answer or the short answer?
I'll leave that to you. No, it's yeah, we saw a lot of buyers as well, and this week you saw, especially yesterday or 2 days ago, price come off quite a bit again, and currently we're somewhat in between those levels. So interesting to see how it develops.
I guess it's got-
exactly. I mean, that kind of goes into what Chris just mentioned, right? In terms of how the volume comes and what it does at specific points in time. So that's what you saw happening last week.
Yeah, it makes a lot of sense. I guess it's a you maybe have more information than us, but I guess it's a combination of a short squeeze and German reporting period coming up essentially. So that's our thesis on it. But
I'm not sure how you define a short squeeze per se. From a financial markets perspective, it's definitely not the case. So, as said, we see there's plenty of GOs to go around. So, in order for there to be a short squeeze, you would have to have a lot less
Yeah.
supply, I'd say. I'd more keep it on, quite a decent amount of buying in a relatively short period of time.
makes sense.
Right, guys?
Yeah, thank you so much.
Thanks for
Right,
your
thanks.